Good morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call, 9th of March, 2026. A lot to cover this morning. Some breaking news. Basically, oil has popped through $100 and gone to $111 this morning. It's settled around, somewhere in the 90s. It's up around about 20% this morning. As obviously we hit stops to the upside and we really, which is really going to make this morning's open very grim. Add to this soft labour market numbers, the worst we've seen in quite some time. 92,000 jobs lost in the US, and I dare say even Trump's own supporters will be turning against him pretty badly this morning. So this was the market Friday night. Nvidia dropped, and Amazon, some of these industrials here as well. Overall, it was just a broadly bad night for the market. Software stocks still on that recovery path, but you just got to remember to bring into context that they're still lagging the index fairly significantly, and we are really, they're really already sort of the damage has largely been done there. It's at the moment it's 9:41, and we have overall. We've got indices, industry futures, as it stands, down 1.5% on top of these moves here in the on Friday night. So we were down 1.5% in the Nasdaq. We were down 1.3 overall in in the S&P, etc. We've got sort of early indications of things like the from CFDs, etc., of these things being down a further sort of 1 to 2% on top as well. So it's going to be a fairly grim morning in terms of in terms of the market here on the open with the SPY. So that 12% move there and that 35.6% move over 5 days now is roughly around about just over 50% at the start of the sixth session, and we can add another 20% to this. So overall, what you've got is a situation where basically the Middle East conflict is really is dragging out. There's been the Israelis have hit a key Iran oil deposits. There's chaos, basically. As the Strait of Hormuz essentially remains closed, there are, the Arab Emirates and Kuwait have started reducing oil production, and others may follow because their storage is filled up, because the oil tankers can't get out or in to pick up the oil in the Strait of Hormuz. So overall, this now is dragging out to being a much longer disruption to supply, and look, we're basically, this is super inflationary. The longer this drags on, it's going to get worse. The son of the Ayatollah has been elected, and I don't know I haven't done enough work on what elections mean over there, but I can't imagine, the son of a guy who was just killed, or what I would assume he would believe was assassinated by a foreign government, is going to be overly forgiving, but that's just speculation on my part. But yeah, I can't imagine that this is going to finish quickly. So we did get to this. I've actually had 3 cracks at sniffing this chart this morning. Firstly at 100, secondly at 103. That's at 109. It did get to a high of 111. I don't know where it is exactly right now at around about 1:45. But look, this is going to be heavily inflationary on top of the PPI numbers and a slightly sticky PCE, which is the Fed's favourite inflation gauge. Add to that, then the soft labour market losing 92,000 jobs, and we're coming into we're coming into essentially we're supposed to be pre-selection for midterms, etc. Trump's really going to have to pull a rabbit out of a hat to back this up, because in all honesty, it was a ham-fisted move, but the market got very complacent because there are so many announcements all the time. We just went, oh, it's white noise, it'll be fine. And this is what happens when markets get complacent. So I look, stagflation, which is softer economy and higher inflation, is the worst possible result for equity markets. Bond market yields have already shot through highs in Australia today. I would imagine it's going to be very similar for bonds all around the world with inflation coming, because it means that any capacity to cut rates now has just been eliminated by this move. And I would say that any bargaining chips with oil up here that Trump thought he had are now gone, because he needs to do whatever it takes to get this back down as quickly as humanly possible. And that's what you're going to have to be watching over the coming days. I would imagine, nothing apart from the energy stocks, or particularly the oil and gas stocks in Australia, will be immune from this hit. Even realistically, gold will, it may be a bit of a sell everything moment on the open in the Asian markets today. And this is never a good time. The Asian sessions are notorious for being hyper volatile without, when it's Sunday night in the US. So we would expect to see some pretty wild moves today overall. And look, this was, something along these lines was coming, and you add to this, and we've been following this risk monitor for quite some time now. Add to this private credit concerns. PIMCO called for a likely rude awakening in default rates for private credit as well, and they're the world's biggest bond manager. A little bit of self-interest maybe in there, because it's probably taking a lot of money away from them. But these record redemptions in the Blackstone fund, these spot fires are increasing in private credit. And then, we're obviously seeing the SaaS apocalypse is largely over now. Even in a market that was down 1.5% on Friday, those software names managed to be up. But look, I've got to say that, whilst that's been the best recovery, or the best positive move against the index in a 5-day period in history, I think largely, it'll probably come back to the pack as just broad index selling comes in and just brutalises markets. So the SPY was down 1.7% on Friday night. I would say that at minimum it's going to be down, based on this move, probably anywhere up to 3, maybe more, on the open here. And there probably is not going to be a lot of places necessarily to hide. As I said, stagflation is an absolute disaster for markets, and I don't think even your inflationary hedges are going to help you too much at the moment. You want to be out of those cyclical names, just generally, and probably it will attract, I think, non-cyclical sectors like the healthcare sector, which has been heavily beaten down over the last 12 months. And probably 24 months may start to attract some buying and some attention, because the money's, generally the money used to just go to cash or into bonds. These days, it tries to find another sector. So, in this age of algorithmic trading, moves like this are just more and more common all the time. And it really does, this computerized trading really does increase volatility. We've got VIX bordering on 30 at the moment, which is extraordinarily high. But usually what we see is what they call Volmageddon, and another one of those wonderful, catchy names that markets love. But once vol starts to unravel and spike to the upside, we just tend to see records after records after records. So yeah, it's probably a time for you to be calm. You've known this has been going on for quite some time. If you haven't gotten out of the things that you should have gotten out of, and you've been complacent yourself, now is likely not the time to be acting on a knee-jerk move on a Monday. It is always a bad time to react and make core changes to your portfolio. But this is what we're talking about when we've now got these key risks, and one of these key risks has tipped this over, and I think you'll start to see more focus being put on these other concerns now as the negative spiral starts to go, and that buy the dip, I dare say, won't necessarily be dead, but it's not. That's been such a default and easy trade for investors that it'll only take being burnt once or twice for it to cause a bit of a snowball move to the downside. So we're here at MPC. We're very heavily back to cash or gold, and we've had recent allocations to this SaaS and software software sector. We really will be looking for opportunities to maybe buy, but certainly not today, and maybe not even in the next couple of days until things start to settle down. Trump is generally known to act pretty quickly and try to do a deal, like the best deal that's ever been done in the history of deals. But expect some of that garbage out of his mouth this week. He will have to scramble to cover himself, because what he has been public about owning this, and now he's going to have to own it for the consequences of it. And the fingers cannot be pointed elsewhere. So I would expect some form of press conference or announcement or some form of distraction via policy, etc., from him within 12 to 24 hours, because this is a huge move, and he has really been a massive fan of trying to keep energy prices down. So look, stay safe out there. We've got our Software Survivors webinar. We've got a huge response to that so far. We're actually running out of spaces at the moment. It's probably only about 40 spaces left, to be honest. Scan that code. If you want a distraction on Wednesday from what's going on in the broader market, and look for some stocks to buy and learn how to basically start to review your portfolio yourself in terms of the longer thematic of AI. These oil moves tend to be fairly transient. So while you don't want to lose sight of the forest for the trees, and applying our 5 pillars framework, this dip in the market could actually provide you with some good buying opportunities overall. So it's well worth it from an education standpoint long term. If you want to keep up to date with all this stuff, we've had a bunch of education articles that we put out in the last week around the traffic through the Hormuz Strait, around oil supply, why that choke point is so significant, what potential inflation effects it could have. We've been very much on top of this, and we've been very much on top of the software stuff prior. And as far as news stories go, you can get all of that free on Mosaic with a free user account. The only thing you got to pay for is the recommendation services, which are obviously more actionable. So go and sign up today at mosaic.mpcmarkets.com.au. And you can get all these things delivered to the palm of your hand or available on desktop. And even all 4 recommendation services are less than a coffee a day. So, look, we are offering, and we always do generally offer free portfolio reviews if you're really concerned about today and you don't know what to do with your portfolio. Look, just email us at invest@mpcmarkets.com.au, and we will try and help you out as best we possibly can. Have an okay day. I'm not going to say have a great day, but won't be a great day for the portfolios. But just say don't make any rash decisions out there, and we will speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.